Shares of Palantir Technologies moved higher by 3.7% to $134.86 during Friday morning trading. Earlier in the session, the stock experienced wide swings, moving between $128.51 on the low end and $137.86 at the high. Trading activity was heavy, with approximately 22.8 million shares changing hands, signaling strong investor engagement following the recent volatility. This recovery came on the heels of a painful decline the day before, when Palantir shares dropped 6.8%. That pullback reflected growing unease among investors about the company's latest surge in capital spending. Palantir has been making aggressive investments in data centers and advanced computing chips, betting that these expenditures will support future artificial intelligence demand. However, the market questioned whether those investments will translate into meaningful returns quickly enough. As a result, the stock slid in tandem with other major software names across the sector. The broader technology landscape was under pressure at the same time. Software companies such as ServiceNow and Salesforce also declined, highlighting how sensitive the group has become to shifts in sentiment around artificial intelligence spending and interest rate expectations. When confidence wavers, investors have shown little hesitation in selling high multiple technology stocks. Friday's rebound was not limited to Palantir alone. Major Wall Street indexes managed to claw back some of their recent losses after what had been a brutal week for technology shares. Even so, the mood remained cautious. Lingering concerns about Amazon's updated spending outlook continued to ripple through the market, reminding investors that large-scale capital commitments can quickly change the narrative around growth and profitability. Market strategists have pointed out that this pattern is not unusual. Periods of intense excitement around emerging technologies are often followed by phases of deeper analysis and restraint. In other words, markets swing from unfiltered enthusiasm to careful evaluation, especially when expectations run ahead of near-term results. Despite Friday's bounce, not everyone is convinced the worst is over for Palantir stock. Jefferies analyst Brent Thill reiterated his cautious stance, arguing that valuation remains a key concern. According to his assessment, the stock still looks expensive even after the recent pullback. Importantly, his view focuses on how the shares are priced rather than questioning the strength of the underlying business. Jefferies maintained an underperform rating and assigned a price target of $70, suggesting meaningful downside risk from current levels. Balancing those concerns, Palantir received a boost from a newly announced strategic collaboration. Cognizant revealed on Thursday that it has entered into a partnership with Palantir aimed at integrating Palantir Foundry and the Palantir Artificial Intelligence platform into Cognizant's TriZetto healthcare systems and its broader business process operations. This move highlights Palantir's growing footprint in healthcare and enterprise operations, areas where data complexity and regulatory demands create fertile ground for advanced analytics. Executives from both companies emphasized that the collaboration reflects a shared commitment to scaling artificial intelligence across large organizations. The message was clear. Enterprise artificial intelligence struggles not because the models are weak, but because real-world implementation is hard. Palantir's tools are designed to bridge that gap by embedding artificial intelligence directly into operational workflows. Financial performance has also played a central role in the stock's recent narrative. Earlier in the week, Palantir reported that Q4 revenue surged 70% to $1,407 million. That growth rate reinforced the company's reputation as one of the fastest expanding players in the enterprise artificial intelligence space. Looking forward, management outlined ambitious expectations. For 2026, the company anticipates revenue to range between $7,182 million and $7,198 million. In the nearer term, Palantir forecast Q1 revenue between $1,532 million and $1,536 million. These figures suggest confidence that demand for its platforms will remain strong across both government and commercial customers. Additional insight into insider activity emerged through a regulatory filing. The disclosure revealed that Palantir director Alexander D. Moore sold 20,000 shares on February 2nd under a pre-arranged trading plan. The transactions occurred at prices ranging from roughly $146.75 to $151.14. Even after completing these sales, Moore retained a substantial stake of 1,172,978 shares, indicating continued long-term exposure to the company. While valuation and insider sales often capture headlines, Palantir also faces geopolitical and regulatory challenges. In the United Kingdom, lawmakers and activist groups have been pressing the government to pause or re-examine Palantir's public sector agreements. Reporting indicates that the company has secured more than £500 million in contracts across the United Kingdom since 2023. These deals have drawn scrutiny over data privacy, government oversight, and the expanding role of private technology firms in public infrastructure. Taken together, these dynamics leave Palantir caught between competing forces. On one side, investors are eager for rapid growth and are drawn to the company's expanding role in artificial intelligence. On the other side, the same investors are quick to punish software stocks whenever the artificial intelligence narrative weakens or interest rate expectations shift. The macroeconomic backdrop adds another layer of uncertainty. The technology sector is now awaiting the delayed United States January jobs report, scheduled for release next Wednesday, February 11th, following a brief federal government shutdown. This report is widely viewed as a critical indicator for interest rate policy. Any surprise in employment data could influence bond yields and, by extension, valuations for high multiple technology stocks like Palantir. To fully appreciate Palantir's position today, it helps to consider how dramatically the company has evolved. Before the artificial intelligence boom, Palantir was largely perceived as a secretive data analytics firm working closely with the Department of Defense. Its reputation was built on government contracts and complex intelligence applications that were often out of the public eye. Today, that image has broadened significantly. Palantir now appears across a wide range of industries. Large private enterprises in healthcare, financial services, manufacturing, and logistics are increasingly adopting its platforms. These organizations report meaningful efficiency gains driven by better data integration, faster decision-making, and improved operational visibility powered by artificial intelligence. At the heart of this transformation is the rapid advancement of artificial intelligence itself. One of the most influential developments has been the emergence of the large language model. These systems rely on generative artificial intelligence to help users complete tasks more efficiently, from analyzing information to generating content. Large language models are especially powerful when embedded within existing software ecosystems. By integrating them with adjacent programs, organizations can process massive datasets, automate complex workflows, and extract insights that would otherwise remain buried. Engineers can receive assistance with writing code, while data scientists can quickly navigate complicated inputs to arrive at optimal solutions for sophisticated problems. Palantir's competitive edge lies in how it structures data through ontologies. These are detailed visual maps that represent relationships across an organization's data at the most granular level. This design allows decision makers to simulate scenarios using real-time information rather than relying on static reports that reflect the past. In fast-moving environments, that capability can be a decisive advantage. Given the breadth of Palantir's artificial intelligence platform, it is not surprising that analysts see an enormous opportunity ahead. Morningstar analyst Mark Giarelli has suggested that Palantir's total addressable market could range from $1.2 trillion to $1.8 trillion. That estimate underscores how large the potential runway could be if adoption continues to expand across industries. The company's recent growth figures support that optimism. On February 2nd, management reported results for Q4 and the full year 2025. For the full year, revenue climbed 56% year over year to $4.5 billion. Even more striking was the performance of the non-government business. United States private sector sales surged 109% year over year to $1.5 billion, highlighting accelerating adoption outside traditional government customers. Profitability has also become a defining feature of Palantir's story. Many hypergrowth technology companies prioritize expansion over earnings, often operating at a loss for extended periods. Palantir has taken a different approach. In 2025, the company generated $1.6 billion in net income and produced $2.3 billion in adjusted free cash flow. This combination of rapid growth and meaningful profitability is relatively rare in the software sector. Even with these strengths, valuation remains a central debate. Palantir trades at a price-to-sales ratio of 103, a level that stands far above most software as a service peers. This premium reflects investor confidence confidence in the company's long-term potential, but it also leaves little room for disappointment if growth slows or market conditions change. For investors navigating this landscape, one approach stands out. Rather than attempting to time every price swing or earnings reaction, steadily building a position over time can reduce risk. This strategy, known as dollar cost averaging, allows investors to participate in long-term upside while smoothing out the impact of short-term volatility. Seen through a long-term lens, Palantir continues to rank among the most compelling artificial intelligence opportunities outside the largest technology giants. For those seeking exposure to category leaders beyond the familiar names dominating big technology, Palantir Technologies remains a company worth watching as its growth trajectory continues to unfold. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.